Hello, everyone. This is Sergio Marrero, and tonight we're here with another episode of RBL1 Live. We have our esteemed guest, Amy Nauiokas, who is the founder and CEO of Anthemis Group. Thank you for joining us tonight.
Oh, thank you so much for having me here.
Yeah, excited to have you as our guest. And for those that don't know, just to share a little bit of Amy's background, she has deep expertise in finance. Previously worked at Bear Stearns, Cantor Fitzgerald, along with Barclays Capital, and for the last several years has been focused on venture capital, and particularly excited to dive in tonight to diversity in venture and her view on the future of fintech. But without further ado, wanted to turn it over to Amy, and if you can share with the audience a little bit about what is Anthemis Group.
Sure. That's a great softball to start with. Well, Anthemis Group is a company that I co-founded over 10 years ago now. And we are an investment platform exclusively focused in what the world has now affectionately accepted as fintech. And I say that because for us, even from the very beginning, it was a little bit, our thesis was always a little bit broader than just traditionally taking financial services companies and adding some technology and seeing what happens. We developed and designed our thesis really around deploying human and financial capital in the service of creating a significantly more equitable, democratized, and in doing so, resilient financial system for all. We were grounded in three guiding principles right from the beginning. We believed in not a revolution of sorts, but more of an evolution, that this industry would evolve with both insiders and outsiders. And in doing so, we could make smart decisions about everything that defines and enables the market structure. We believed that we could make a lot of money for our investors and for our founders by doing good and not evil, steering clear of any of the predatory elements of the industry at large, and then more specifically committed right from the very beginning around building not only our team as with a focus on diversity, inclusivity, and equity, but also our entire ecosystem. And so now we sit sort of firmly in the world of financial services investing, and we have offices across North America and Europe, and we've got a broad ecosystem of people committed to some of the same values that we are.
Amazing. Thank you for sharing a little bit about that. I was, in doing research and learning about Anthemis Group, and I saw that you invest in companies as well as you invested in Backstage Capital. So it's, a fund or an innovator in the space. Can you talk about what types of fintech ventures do you look for? And a little bit more of that theme. So as founders are looking at reaching out.
Absolutely. Well, to be very specific for any founders that are listening tonight, we deploy mostly early stage capital. So we have structures that operate as more of a traditional venture studio. So sort of pre-seed idea stage concepts. We have structures around early stage, so seed A and B, and then we have a venture growth strategy as well. So we really kind of run the gamut depending on a particular subset of financial services, but we have a broad approach to what we call kind of embedded finance. It's a term that we think we coined many years ago, but we're thrilled that most people are picking up on and understanding it now, right? This idea that financial services is fundamentally the backbone of our entire economy. And so as such, when you look to invest capital in the sector, you're not only going to find those sort of obvious category identifying trades that we've seen over the years, the robo-advisors like Betterment and the insurtech plays or the sort of neobanks and such, all of which are in scope for us. But what we get really excited about is those companies that a lot of people wouldn't define as traditional fintech, right? The embedded finance plays across industries like media or healthcare, mobility, education, places where you need to understand how markets work and how they're designed, how they're regulated in order to, sort of appreciate the embedded nature of either the finance and lending element, or the insurance and risk management element, or the transactional and payments element. And in that vein, virtually anything in the economy is within thesis for us.
Amazing. And thinking about that is like, what do you focus on a particular geography, or are there certain types checks that you all write?
Yeah, 50% of our portfolio currently is in Europe, and 50% is in the US. We've been investing that way from the very beginning. So we have a lot of experience, particularly as the world has sort of collapsed from a travel perspective, being able to identify and deploy across continents and across certainly state lines. And that's been great. I also think it serves the world well to be looking at particularly the financial services sector with a little bit less strict rule around geography, right? In the old days, we used to say that if a company started in Scandinavia and just moved west every quarter until it got to the valley, it would sort of be worth more just by its movement. And now what we're seeing is, and continuing to see is that in reality, you can find intrinsic value revolutionizing this industry in virtually any geography, and that you can find those similar returns, similar opportunities, but you have to have a team that's distributed and competent working in that. So we'll look at companies across Europe and the US, the areas that we continue to seek and get really excited about, anything in the insurance space, anything in the social media or media space where we're sort of leveraging creating kind of economies inside of new markets and new businesses. Infrastructure trades, right? Well, we call it fintech of fintech, the stuff that is holding up the rest of these big names that you're seeing out in the markets now. But there's a lot of companies behind those big companies that we love. And that part of that, I think, comes from really understanding market dynamics and market structure.
Yeah, and on that note, what inspired, if you could take us to that moment of that was the shift into venture for you. Looking at your background historically, it looks like you came from deep banking finance with Bear Stearns, Cantor Fitzgerald, Barclays, and then you said, hey, let's focus on the future of fintech. What was that inspiration for you, and how did that happen?
Yeah, I mean, I guess going back to the very beginning, I was not your typical financial services executive. Certainly, I came out of I was living in Cameroon in Western Africa, and came out of the Peace Corps and got back to the States and recognized that I had what I believe were virtually no skills to bring to the market to be able to do any of the sort of big lofty things I wanted to do around, as you are as a 21-year-old wanting to change the world. And so I made a logical move. I had a ton of student debt. I did not have come from a background that allowed me to sort of, make some phone calls and get some jobs. But I pushed my way in and used the fact that I was so incredibly different than everything else the banks were seeing to tell my narrative and to tell my story. And it was in the early 90s, and it was at a moment where people, or at least enough people, were paying attention to stories that weren't pro forma and sort of pedigreed of sorts. And so that got me in the door. And I think I excelled in the earliest days, and then probably built my entire career on the fact that I didn't fit into what the rest of the world inside of those big banks were doing. And so I became kind of a natural outsider inside the big institutions. And that's what really led me to this sort of area that is now kind of, been defined as fintech, right? The idea that in the early and mid 90s, nobody really understood what this stuff could do to the industry. And they most certainly didn't see the transformation that myself and some of the others that I met along the way saw. And by the time I was ready to sort of step out on my own, I had successfully climbed the ladders to sort of senior management, and I think I was recognizing that even at the top of my game, as a woman inside of a larger corporate environment, it was going to be pretty hard for me to make the real change that I felt I could impact on the industry and on the world, quite frankly. And I didn't want to waste my time anymore. It was a risk. It was chancy. My partner and I, Sean, started this company with our own capital. We plowed everything we had into it. And that can be scary. And I'm sure there are a lot of folks out there who are thinking of doing the same right now. And it was scary. And there were moments where we weren't sure it was the right decision. But there comes time in life where you have to bet on yourself. And for us, that was that moment. And we were there early. Most people weren't paying much attention to what we were paying attention to. And quite frankly, if they were paying attention, they probably thought we were insane. But we're feeling quite vindicated now, sort of 10 plus years later, when every other word out of, the taxi driver's mouth is fintech. I think people have recognized that this is an industry trend that is here to stay. But it's still, we've got a lot of work ahead of us, right? I mean, I think the work that you guys are doing at RBL1 and a lot of the other folks you mentioned, we backed people like Arlen Hamilton at Backstage, and we backed Reshma Sohani at Seed Camp in Europe. And, there are a lot of us now focusing on this particular area of trying to transform industries and fight for equity. But there's still a lot of work to do, right? I think 2020, Black and Latinx founders received only 2.5% of all of the funding that went to venture capitalists, right? Went from the venture capital industry, and women lost money last year, right? So I think it was down 30% less in 2020 than in 2019. So with all the talk and all the fantastic focus on this stuff, and knowing full well that there is a change coming, we have to stay vigilant, because it's still hard work, and we all need to find our tribe, and we need to figure out how we can be better together. Because, even though we're managing, just shy of $1 billion at Anthemis, it's not enough to make real systems level change. And so we need to work together. And for me, that's a long-winded way of sort of explaining why I chose venture capital. I just thought I could do more good and perhaps more damage to the existing infrastructure if I started at the beginning, right? If you get two founders or one founder or even a team of 6 people, and you can convince them from the very beginning to build companies slowly and thoughtfully with diversity of thought, diversity of people, diversity of ideas, and just, a good value system, you can make much more change than if you try to sort of sprinkle it on a large institution that was built at a very different time for a very different audience with a very different vision. And so for me, venture capital is just the best place in the world to be if you want to, try to really make systems level change. But it's hard work, and it takes time.
I appreciate you, highlighting the change that's needed in the industry, and also the work we're doing, where our thesis is all around, let's focus on the education component. And you sharing your story today is definitely part of that. And taking a step back for people that may not know, like you're saying, it's like managing $1 billion in capital and moving that, there's much more to do, right? At a broader level. So, for you, what are some of those, I think of, there's disruptive trends happening. That's one conversation, but another one is levers. Let's start with the trends. What trends do you see being most, that being most disruptive right now that you're, keeping your eye on?
Yeah, I mean, I'll start with the biggest one, because it's already on topic today, and I know it's something you guys care about. I hate to call it a trend, but I think it's important that we reflect that it is a trend, right? This trend towards ESG and diversity, inclusivity in the industry is the thing that everybody is talking about right now. And for someone who spent my entire career focused on that, I'm so thrilled to see it and to hear it. But it comes with a certain amount of responsibility, right? For those of us who actually have capital and people to deploy, we need to be authentic about it. There will be no credibility in this industry, and will be no change that is sustainable if we don't do this for real. This is not about making one hire and making yourself look good, or making one investment and making yourself look good. This has to be scalable, and it has to be all, right? Diversity can't just be one person, one type, one culture, one race. It has to be inclusive. And I think that, as allocators of capital, and as mentors and as recruiters and as managers, our job is to make sure it sticks, right? We have a moment. And I've heard a lot of folks talking in the industry about this moment. There's a lot of capital around, there's a lot of chat about this, but we need to make sure that we're being thoughtful and credible and authentic, because there's also a lot of virtue signaling. And one of the ways I think that on the sort of allocator side, I encourage every single fund manager that has capital to think about how you support those scouts and smaller VCs out there that are starting up that have diverse managers. You don't have to write a huge check, write a small check, but allocate a little portion of your fund to helping others get started, because the work will be that much better if there are more of us doing it, right? So if you believe in it and you truly say you're believing it, don't just talk a good game in the media, but get out there and start allocating capital to the scouts. That, those first venture capital funds are really hard to start. I mentioned how hard it was for us, and we happened to have a career in financial services. So we had our own capital that came after about 15 years of scrimping and saving inside of a very well-paid industry. That's not everybody's game. That's not everybody's journey. And so we have to be really conscious about who we're backing in those kind of scouts and those early stage communities. The other thing I would say is we have to hold the LP community accountable, right?
And how do we do that? Because what I'm seeing is some of the, LPs are saying it, right? They're getting out there. What does it say? You want them to either hire or wire. I've seen more hires, which is good. The wires are coming. They're slow, super slow.
And I'll tell you, but it's. Not to be, I'm sure I'll probably get in trouble for saying this, but I think one of the ways we can do it is when I say hold them accountable, actually ask the questions, right? Because it's almost imperative as an institutional investor that your job is to find a way to say no, not necessarily to say yes. And so when they throw at you all the reasons why they're going to say no to you, and it's, my favorite lately, and you guys will appreciate this, my favorite no lately, we're on fund 2 with massive fundamental, performance, and we're still getting no's all over the place. And my favorite no lately is, well, we're really trying to focus our attention and diversity and inclusivity on new funds, on brand new funds, because, that's where the real, and it's kind of like that sophomore album from a record, it's like, wait a minute. So I've had to bust my butt. My team has busted their butt. And now you're saying that we're not going to get capital because we happen to be doing the job well with a diverse team that is literally 75% female investors, right? 38% Black or Indigenous people of color, 13% LGBTQ. We've got portfolio, a quarter of our portfolio are women and founders of color. And we don't get a chance at your capital because now we're not a first-time fund manager. It's sort of this really interesting model. So we have to ask the questions and say, do you really, why is that? Who are you backing? Or ask them, okay, if you're not going to back us, who are you backing? Tell us who you're backing that, fits the requirements. It's tough, but I think if we continue to, like I said, there are people out there that are incredibly focused on this and they are incredibly diligent about it. And you've got to keep, for every no you get, you'll get a yes. So you got to keep going.
Love it. And in terms of trends, and that's one thing I've had a conversation or more debate with some colleagues who we know how important this is. We've been talking about it since before it was popular, but I guess there's a concern that it is timely. It is of the moment, and then the next moment it won't be. When it's not the priority or not in the news and not of topic, it won't be the focus, and it'll like swing back necessarily. So
I remain optimistic, and I think it has to be more than just a trend, because I think I've met enough people now like yourself who are honestly and earnestly believing this and doing it properly. And so I think that we got this moniker somehow over the last few years being called weird. It's a weirdo fintech, Anthemis, marches to its own drum. There must be like 3 or 4 articles that talk to us as like these outsiders and these weird, but in the last year, I always used to say, well, if being weird is because I'm focused on equity and inclusivity, then I'll be weird all day long. But in the last year, I felt a lot less weird. And I felt a lot more affinity and kind of collaboration around this issue, which makes me think it is going to stay. Now, there are, And it has to stay, right? Because we've lost so much economic value in this economy in this last year globally, that if our job as early stage venture capitalists is to help build new companies, we have to build the right companies, right? Because we have to put people back to work, and we have a responsibility to put everybody back to work, not just one type of person. So I feel very, what role we can play, that feels important to me. I do think that there is a trend that we have to watch really carefully, though, as this happens, because there is such a sense of urgency about it, and a fear that, oh my gosh, this money, if I don't get it now, it's going to go away. It's playing a little into the general view, certainly in the fintech space, that, take the money at all costs, get the biggest valuation you possibly can, take the biggest check you possibly can. I got to get mine now. And, on the one hand, I really respect and appreciate that as a woman in an industry, my entire career, that always had to sort of wait behind others to get mine, so to speak. But what I think, could potentially happen is that we start getting companies funded that might have had a really good chance at building something incredibly visionary and incredibly valuable, but because they took the wrong check at the wrong time, at the wrong valuation from the wrong investor, because they were nervous it wasn't going to be there, you start sort of seeing this, like, it's making their job harder, right? You want somebody in the early stage to be a platform. You want them to help you. You don't want them to just give you the biggest check possible and then just disappear until, because they're giving everybody the biggest check possible, right? And so it is important, I think, if we're going to build companies, that we do it thoughtfully. And I encourage any diverse founder out there to really think where you're taking that first money from. And if it means taking a slight haircut on your valuation, if it means you're getting more resources and a bigger platform, think very long about that. Because if we overvalue companies now, not just in this category, but in all categories, you put 2 years from now, 5 years from now, when there's a blip, you'll be roadkill. And that's, not what we're trying to do here. So we need to make sure there is enough money to go around. I promise you, there's so much money in the markets right now. Be thoughtful about where you get those checks from.
And on the markets, I want to go to a shifting topic slightly. What, if you can share some of your expertise of seeing markets over time and working in financial institutions, if you can share a little bit about what's happening in this unique time, right? We've been on a talk about bull run for a long time, and there's several $1 trillion of stimulus. At the same time, early stage valuations seem to be at an all-time high. I just read an article they talk about the Buffett rule and looking at our GDP to valuations, and it's totally out of whack. What should we be cognizant of in this time?
Yeah, no, I think it's a great question. And I always appreciate a moment for us to sort of pause. At Anthemis, we have we're trying to honor a Wednesday reading day. And, when the markets are this active and this frothy, taking that time out as an investor to just take a breath and read is really helpful, because to your point, there's a lot of signals, if you pay attention to them, that we need to heed, right? Look, I don't think we're incredibly bullish. I think that the market for fintech is here to stay. We have never in our entire existence as fintech investors, and I've been doing this for 30 years now in this particular sector, and for 15 as an investor, at the early stage, we've never seen the amount of individuals who understand what's happening, because for the first time in their lives, actually felt it themselves. Right? They had an experience with a bank that wasn't able to fulfill their PPP loan because they couldn't do KYC. They had an experience where they weren't able to access something that they historically would have no problem accessing. All of the people who were working at banks got sent home, and none of them could work in those first couple of weeks, right? So there's a real shift, and I use my rule is usually my father. So my father starts talking about fintech and how he's managing his account online, I know we've certainly arrived. So this isn't going away. I think that, to make money and be useful in the sort of early stage venture space, you have to go where other people aren't going. So without a doubt, we're steering clear of a lot of these really big consumer buckets, right? The places that are, a lot of those are going to win, and they're fantastic. But they're a different model than sort of, focusing on the infrastructure layer of financial services. It's not always the sexiest, it's not always the easiest to understand, but there's significant value in the sort of rails that are going to hold up this system, because the entire system from the sort of inside out has to be rebuilt, right? And so we're getting really excited about those. I think people, there's been a lot of enthusiasm around the SPAC market. I think, again, same thing I said before. I think it's a fantastic financial instrument for venture capitalists, no doubt. This is not going away. I do think, though, you have to look for value in the market, because it's not just about, taking a company public. It's about growth capital and what they're going to do with that next. And that's the opportunity. But I think it's certainly here to stay.
And speaking of future infrastructure, I have to ask one of the experts in finance with the latest Coinbase IPO and the focus on cryptocurrencies. What's your opinion on the space? What part do you think it plays in the future of rebuilding this infrastructure?
Yeah, look, this decentralized world of finance is happening in our world for sure. My 8-year-old can explain to me more about Bitcoin than probably most adults can. So I know that there's something to be said for that. And look, there's trillions of dollars changing hands from the baby boom generation into the hands of millennials in the next couple of years. And that, though, I don't care what you say about the generation, they look at things very differently. They have different motivations. They have different experience. They're digitally native. And so the way they're going to look at the markets and operate in the markets are going to be incredibly different than what we've seen before. So there's no doubt that this is the way of the world. And a lot of the guys, and I hate to say it, a lot of them are guys running these companies are superheroes to this millennial generation, right? So they're being watched in the same way, growing up, we probably watched athletes or whatever, rock stars. And so that to me feels like, it's going to continue to create a big amount of our economic mindset. That said, not to sound repetitive, but it's the stuff that's holding that up that's really important, and who those founders are and the companies they're building and on what value system. The other downside of getting a ton of money really quickly or a really high valuation really quickly is that you feel the need to do things really fast too. And yes, the market is competitive, and we need to continue to stay one step ahead of our neighbors, but it's really hard to build a very strong set of values and a quality company if you're hiring 500 people inside of a week, right? You can't do it. People are going to slip through the cracks, mistakes are going to be made. And so we're continuing to encourage folks to kind of slow down a little bit in that capacity. I still love all the companies that are holding these companies up, so when Bitcoin emerged, initially, we were always in the picks and shovels game, right? So it's not about the gold rush; it's about what you need to access the gold. So we're super excited about that infrastructure space. With
coming at time, but I do want to ask, on one particular trend, with the trend of crowdfunding and the ability for early stage companies to bring together a few $1 million and in lieu of going to early stage venture capital.
Yep.
What role do you see that playing? I think it's one of these areas that's growing much faster, and it is disrupting venture capital, and no venture capitalists are talking about it. It's quite fascinating.
I think if done right as a part of the round, I think it's fantastic, right? Particularly for those companies that are mission driven and have a built-in audience that want to support it, right? Democratizing and being conscious about the capital that you're putting into your company in the earliest stage is really important, because it's going to keep you moving with a high quality, commitment to a value system and to your mission. I think where it gets tricky is if it's all the capital you're taking, and you're not getting the type of support and governance and advice that you would get from a traditional venture capitalist, right? So my job is not only to deploy capital, but it's to deploy human talent. And so our platform is built by and requires a sort of ecosystem of people and a platform of people who actually are bringing things to these early stage founders at a time when they couldn't either afford to hire them in-house themselves, or they just don't have the experience or the time or the resource and the focus to be able to identify, a particular challenge that our team can bring to them. And you don't get that with crowdsourcing, right? So if you, can find a way to incorporate some of this stuff into your cap table at the early stage, if it makes sense for your mission and you can crowdsource from people, either customers that eventually will be your partners, or other people that you want around you as time goes on, I think it's great. But I think you have to be careful not to isolate out so much of the venture capital that you don't get a really good board member that's going to continue to dive in with you and get into the stuff when the stuff gets tricky, right? Or access to a platform that can help you with your marketing or your PR or your product development or recruiting, your board, all the things that a good VC with a strong platform should be able to provide for you.
Excellent. For the audience, what's next for Anthemis Group?
Gosh, I guess a little bit more of the same. We're keep pushing forward. We're feeling pretty excited about the fact that the messages that mattered to us right from the beginning are starting to resonate with the general market. That's both on thesis of fintech as well as our guiding principles. So that's good. It's great to know that there are other people out there like you guys who are fighting the good fight. So we're just going to do a little bit more of the same. I'm going to continue to help really strong founders and keep looking around the corners, right? That's the whole point. You've got a diverse team and you focus on diversity, then you're going to see a lot of stuff that nobody else is seeing. So it's not just good for humanity, it's good for business. And we're just going to keep doing our thing.
Well, thank you, Amy. For everyone watching, this is Amy Nauiokas, that is the CEO and founder of the Anthemis Group. Thank you for joining us tonight. And for all those watching, tune in next time for RBL1 Live to hear from more amazing VCs and CEOs joining us. So thank you for sharing your wisdom tonight, Amy.